following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we're going to take a look at the dollar immediately. Want to just kind of make some notes here. We have this 99.37 that we've talked about was kind of the top of the mountain, if you will. Roll down one side or the other that I was looking at to really brace myself to buy support on 99.37, that POC on the weekly. And again, why was that the case? That's because we had some really good, information on the daily, staying above our profiles, and no new profiles attempting to appear. And there's that 37, if you will, right in there as far as the weekly POC goes. But we're going to take a look at the 240s, and we're going to notice that, this was also kind of the fence, if you will. We've got this 99.24 and 37. This is our 240s. We always look at the 240s to kind of regulate the trade up. And I talk about this in some videos that I've actually completed that will be in Tommy's hands today. And, they forced me to work so hard over at TFNN. We. They're asking me to get collagen injections also for my lips for the just for TV's sake, and I refuse to do that. But we're looking at the 99.24, 99.37. This is kind of the 240s. This is the 240s kind of regulating the trade. And then when that happens and we breach those areas, we've got to just sit tight. And this is one of those situations where there has been really not a lot of reasons to hang on to the long trade. We've got to be able to kind of stop ourselves out, and we kind of look for other areas to really buy this again. And in my opinion, what could be the case now, is I'd love to see a new daily box appear, if you will. And that's not happening yet. So, again, this is kind of a sit tight. I'm not a big fan of going short the dollar, so I'm still looking for reasons to go long. All right. And I'm not going to curl my eyelashes for TFNN. So, Tammy, we will not be doing that. We're going to take a look at the S&Ps here, too. So, again, these S&Ps are really astounding to me. They just weather storms like there's nothing, like there's no tomorrow, or 15 ways to Sunday, as they say down here. We had a really cool situation yesterday where we just got almost right into that. You always want to wait for markets to come to you. This was one of those cases, kind of in no man's land on the S&Ps a little bit there. Breath staying negative. But, some of the short-term breaths were really kind of, and on a relative sense, looking at the other global indices, Steve Rhodes and I were talking about that yesterday. Not a bad situation, and I really fully believe we can get that 1909 and 1918 ultimately up there. So, how do you deal with this? Kind of we talked about, letting the 240s kind of regulate this. I love the way we have got a new profile that's kind of appeared higher, kind of a change in tone here. If you look at this, we've been edging down. Now we've got higher lows and higher highs on a new profile. 1880 is going to be support. Looks like we've kind of held that this morning. I don't like the way it's not getting away from that relatively quick, but I think, some of the news out there globally, and what is that news globally? We're going to hit that really quick. We're going to look at our buddy, the Shanghai. Not bad action, kind of did the throw up move again, and not a complete key reversal situation, but I like the way it's closed. The S&Ps obviously are not immune to looking at that as somewhat not the negative situation. So going back to the S&Ps, what do you do now? In my opinion, and I don't have our scanner up right now because, and if you guys are trying to get the scanner up, we're having a couple of permissioning issues on our permissioning server. I'm going to see if we're up again. No, we're not. So I can't show the breadth right now. But again, I'm showing E-signal charts, and that support right now on the short term is at 1880, just kind of calling it quits below there. And again, if we get back above that area, I'm going to be looking to buy this particular instrument as far as the S&P futures. All right. So talked about the dollar, talked about the S&Ps, looked at the Shanghai. Nikkei actually closed up. DAX is down right now along with the S&Ps. And we're going to hit gold really quick because this is one that I was a little hesitant on buying. You know, we talked about this. We talked about it yesterday. We talked about this crowding action up into 1104. I wasn't a big fan of looking at this from the short side anymore once we started having these higher lows on a weekly and compressing up into this. And this is that classical, you know, kind of build energy into a flag pennant type situation up against a inflection, and inflection point. And that's why we kind of said, you know what, we're passing on the shorts on this. This is not looking very good for shorts. We had the pop up, but I'm not a big fan of buying gold, actually. I want to see a weekly close above these numbers. Today's Wednesday, obviously. Gold's broken a lot of people's hearts along the way on the long side. I'm not convinced that this is a valid breakout yet until we have a weekly close above 1104. Here's that daily. We had some situations that you guys probably took advantage of along the way. 1060 was a big number. And, you know, if you look at the daily, there's really not a lot of reasons on an intermediate basis to take this off. But again, I'm looking at gold from a long-term basis, and I want to see a weekly close above 1104 before I get too excited. And then more than likely, we're going to have a retest of that for me to start digging in on the long side. But if you guys are long and you bought some of these breakouts, more power to you. I'm just not so convinced myself that gold is a complete long play yet. Silver, man, finally had the pop. So here we go. And this is what, Silverbug's kind of been waiting for, is a little bit of a change in tone here. The bottom of the balanced area is around 14, and the top of the balanced area is around 1442.43. So now we've closed above on a daily. We're kind of coming back and consolidating. If this thing starts spinning and collecting energy around here, as well as gold hanging above on a weekly close above that 1104, you may see 15, 14, 15, 15 up there, which is the weekly unfair lows. That'll be the target for gold, and you can use hopefully 1442.43 as something to orient stops around. Remember, you guys, call in, put notes in the den if you want me to look at something. I'm just usually first 15, 20, 30 minutes going through the usual suspects here. We got to take a look at crude oil. I think I said that right for the first time ever, Al. Crude oil. Olive oil. Here we go. We're going to take a break. We're going to hit crude oil when we come back, guys. Hang in there.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And again, I apologize. We're having some permissioning issues this morning on the scanner. We're getting those resolved. It's actually not our fault. It's never our fault. Actually, it's not our fault this time. They did some upgrades at our hosting service right now that they're looking into that tripped some things up. So again, I apologize for that. Let's take a look at crude oil. It should be up momentarily, literally. It's affecting every single person who's trying to access our information right now. 2871, that big number on the bottom, 3273 up top. We talked about, again, this is still in a downtrend. Don't get too excited when these bear market moves up happen. And what do you do with it now? So again, here's the daily. Here's the 240. I think you just don't have a lot of leverage trading crude oil right now. It did a decent move down, and we kind of had a bear market rally up, and we've reached our targets at that 3273. I think we had 3274, as you can see there, and we've kind of rattled around. So it's kind of a wait and see now, in my opinion. Remember, looking at our weekly, you just don't have any new indications that we've got a new long-term situation turnaround. No new profiles attempting to appear. If you guys are wanting to get long crude oil in a big way, don't know if you want to hear this, but it is what it is. And we could just kind of sink below $30 again, amazingly so. So just keep that in mind. And remember, we talk about things on their lows go lower. You know, these commodities just make, Larry Pesavento will tell you, he's been around and he's seen a lot more than I've seen, and he will more than likely vote yes on this. These things make exaggerated moves sometimes, whether they make sense or not. So you have to keep that in mind as a trader. You have to keep in mind that oil could go to $10 literally for no reason any other way to put it than just to get people out of the long trade. So that's where we're at. We're going to take a look at the XLY really quick. This is something that, again, we talked about this 7184 being the targets on the long term down below. I like the way this is acting, actually, and I like the way we've kind of closed above and come back and retested. But we've got some headwinds here right now in the intermediate, and this is kind of big. But I think if we can get back above 73.70. We're going to have some clear sailing on this again on the north side, and this thing could move relatively quick. This has been a scary little trade, but it's one we talked about, showing the anomaly of the XLY breadth relative to the S&Ps, and we were spinning around up here on all-time highs. And most of the pack wasn't cooperating with the leader, Amazon. And right now, I think we've had the trading opportunity. This thing's actually showing, in my opinion, some strength again. So any type of breakouts above, and we're trading 73.43 pre-market, any types of breakouts above 73.24, which is what we're kind of trading above right now, in my opinion, is something to be bought up into 77.24 with stops in force, of course. DISCK, Tammy, let me take a look at that. DISCK. Discovery Communications. Okay, so Tammy says she found this in our scanner. Obviously, she was doing her own manual sorts or just kind of mining the information in the scanner. Yeah, I mean, this is something, again, you always look for, and again, what was that, 26.46 and 26.60. So, again, when we kind of break above these, I love this trade, by the way, Tammy. Thanks for pointing it out. When we start breaking above that confluence of daily and weekly inflection points, and a lot of times you can go into the scanner, which I can't show you right now, unfortunately. You can kind of find top, or top, bottom. You can find just some kind of things to put on your radar screen to put in your custom portfolio list that you might want to monitor and just kind of see when it. And you can kind of look at the short-term colors and see when these things start changing and breaching some of these inflection points that line up on multiple time frames. This is something that obviously has been a breakout candidate on a weekly and a daily situation now, and I'm not opposed to the broad market starting to kind of spin and head higher, actually being the S&Ps. So now you've got to look at this as I'm sorry, that was 25.60, the initial breakout on the daily. So when you look at these, now you're looking for some pullbacks to buy support around 26.46. If you're long this right now, excuse me, if you're already long this, here's our 240s. There's that 26.54. There's that 26.46. That's the 240 on for highs and the weekly on for highs. I screwed up the time frames there. That's going to be your support to actually buy this. Remember, a lot of times the breakouts are a lot easier to trade. If you kind of break out, then it breaks some people's hearts. It pulls back to support, and they could have got in cheaper. This may be one of those opportunities on DISCK. And if you kind of play that game and you miss some of these things that just take off and keep going, guess what? You don't lose anything. But a lot of times, you catch these things and you look at them, you're like, I don't want to miss the ride. And sometimes it's better to wait patiently. You can orient stops without question around this 26.5 general area on this type of breakout. Nice move, though. Wow. Don't know the news on it, but thanks, Tammy. Let's look at Apple. And I looked at Boeing, Fletch. I want to talk about that too. I was actually, one of the videos I did was on Boeing. Here's Apple. And this morning, 96.39 pre-market. So we're down significantly. And, this is something that, fundamentally speaking, and I didn't miss showing you this week already. When we have a new, this is our long term, this is our weekly. When we have a profile appearing above price action completely, we talk about this all the time, and it rarely is not the case. That's a bearish sign altogether when we have a profile appearing above price action. And this week we had a new profile. We had that yellow bar last week, the yellow peel back in the scanner on the weekly. And we have to kind of wait and see where this profile is going to appear. But it's above, and now kind of all bets were off relative to that on the long side at all. You had a target-rich environment with that yellow bar that appeared on Apple. But, again, we talked about trying to sell that 101.5 in the 104.29 area. Why was that the case? And using that as resistance because this was that This was that unfair high on our daily and that unfair low on the weekly. We talked about that was going to be the area of concern for, closing below the weeklies and going back and rally back above. And the fundamental news overhanging on this stock, Tom's talked about it a lot. Saw some of the other hosts on TFNN. I think David White's banged it to death here, and that's been awesome. They got some issues, and some of the forecasts. You guys can read the reports that actually came out today, kind of starting to spawn the technical action off of that. I hear the music. We're going to be right back. We're going to finish up with Apple, talk about some other stocks, Boeing, and a couple other things that are on my radar screen for today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, guys, on with some tech people about these servers on the cloud. You got to embrace the cloud technology, but you also got to kind of be at the whim of some of the things out there in cloud heaven that you got to ultimately go in and fix. And that's one of those. This is one of those mornings right now. We should be up in minutes. I've got like 10 people on it right now. Apple, we were finishing up pre-market trading 97 this morning approximately, and talked about the overhanging new supply above price action this on the weekly. Can't show it on the scanner right now. We're getting back down below our daily profiles. So what do you do with Apple now? I don't see Apple. I don't see people clamoring to really get to Apple. And on a long-term basis, this is kind of the death knell when you see a profile appearing above price action. So, again, I think this thing could fall apart and really start squeezing some people that are long-term investors in this stock, like it has been. Remember, we've come down from the 125s, 130s of the world. I know we pulled back a lot, but remember, things can go lower, things can go higher, and it doesn't have to make sense to you or anybody else. Technically, we've got some serious things on the short side's favor here with Apple now. Let's see. Just checking on our tech situation here. All right. Okay, we're going to take a look at Boeing, BA. I think I've lost a ton of comments I had before, so let me review what let's see. Boeing. All right. If anybody said anything to Den lately, I had to relog in. Please repost it. Boeing trading 119.50 already this morning. This was on the scanner actually, and that 128.76. Remember, this is kind of the inverse idea that we have with gold, really. Just to kind of put this in light, on the opposite type thing with gold, it's like, if we have the weekly close, we want to see a lot of times the powerful trade to come back and retest where we broke out. A lot of people chase things when they break out, and that can be a game you can make a bunch of points on. But remember, a lot of times these things will break out, come back and retest where they broke out from. And this is a very similar situation for Boeing. It was on my radar screen, coming back and breaking down and retesting that breakdown area, 128.76. Now, again, we had some news this morning. We're 10 points lower from that breakdown. So we had the 128.76 coupled with this 130.62 situation. It was just like Apple. They had those weekly unfair lows, daily unfair lows. You don't have the new profile on Boeing like we have on Apple to really put the death nail into it. But, this is a stock. Again, you got better opportunities out there, and now you just had a news event, and that comes out of the blue. Could have gone straight up, could have gone straight down. This time it goes straight down. But remember, if you're just kind of playing the odds, this is the type of situation you want to see when you see that breakdown and retest. Okay. Thank you. Thanks, Fletch. All right. So, what else we want? What another something else we want to look at? We want to revisit some of these. We want to look at the XLE and what's going on relative to that crude oil map that we looked at earlier. Here's our long term on the XLE. Nothing real special there. I like the key reversal in that weekly last week, but here's the damnable shame, I guess you would call it, of the XLE. We've kind of done that crude oil go back into those unfair highs on the daily, 32.74. Back off the XLE, kind of similar action to the 55.81. Bob and Fletch will get to those two stocks you put in the den in just a second. What do you do with the oil stocks now? I'd like to see some new information on crude oil happen. We're kind of in no man's land on a lot of different levels here. Again, remember, the trend is still down on the XLE and the crude oil in general. Let's take a look at those couple of little dark. What was really, really wild is I happened to be looking at CNBC yesterday. I try to make it a point not to look at that station. It really can get people off track with some of the crap that they talk about. But like John Najarian and Pete Najarian, they come on there, and they're actually very smart guys. And I think they should not be on that network in general. But anyway, they guess what they put on the board here, which we had been kind of picking out easily. They were talking about option plays, and things that were on the radar screen, and actually SWN was one of them. So what I want to do is, we kind of caught this a lot earlier, weeks earlier than they put it on their radar screen. The scanner kind of picked it out. But I want to kind of show you that, after we broke it above that 654 and kind of did some retesting of the profile, one of the cool things now, and again, just those guys mentioning this little stock kind of puts it on people's radar screens, and you may get that kind of pump, and I wouldn't call it dump, but that news-related, everybody's looking at it now and buying options on it. When people buy options on something, obviously somebody else has to be selling those options to those folks. So what happens, the mechanism is, and this is why, I've got a friend that always calls me up, 5,000 calls traded on this and blah, blah, blah. Well, that's great. If 5,000 calls traded on it, yeah, somebody did buy it, but guess what else? Somebody actually sold it. It could be part of a hedge. And just the fact that, people might have gone in and bought options and done these spreads based on the Nigerian brothers talking about this, what happens a lot of times is, okay, the market makers are selling the options, two sides of the trade. They've got to go in and buy the stock to hedge what they sold as a market maker. So a lot of times option activity, buying and selling, will create some movement in the stock because the hedges have to be put on. They're not just going, hey, I'm going to sell people options and make the minuscule spread between the bid and the offer on the option. They're going to go in and buy the stock. They're going to, trust me, they've got a very defined formula that they use, and they would not be in business very long if they didn't use that. And a lot of those are automated type situations. But the guys on the CBOE are definitely not a bunch of jacklegs, and they're gonna do what they have to do as far as mechanisms go. Keep that in mind when somebody says, "Hey, 5,000 traded on the blah blah blah," and that means that God, there's somebody knowing something. Well, that could be tied into a hedge, and if somebody's buying calls, they literally could be short the stock and hoping that the stock goes down, but they're buying insurance. You never know about stuff like that. So, again, just some food for thought there. But interesting how they put this on the radar screen. And I love how this new profile appeared below price action is what I was ultimately going to say. That's bullish for the stock. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, guys, it's kind of a weird morning here. We got the scanner back up, and the launch pad for the indicators we're still having some issues with, but scanner back up. I have to pay attention to this, and I apologize. It's for your benefit. All right, hopefully. Here's the scanner. It's back up. We're going to just kind of start it here. And what I want to do is we were trying to finish up with SWN, some of the things that the Jerry brothers were saying, hey, wow, look at this stock. 726 combined with that now 752. These are the top of our profiles on our daily, and we also have kind of some backup support at 654. Hold on just a second, guys. Kind of a unique morning here. This profile appearing below price action, again, is very bullish. So keep that in mind. Keep those inflection points in mind. Make sure you put your stops in. And considering that crude oil is still in this, balanced area and the trend is still down, always, keep that in mind. But again, using a relative strength trading game, you got two things in your favor here now, in my opinion. You've got crude oil, which has kind of defined itself, and SWN, which has defined itself. We've been talking about this for a while. And you've also got possibly some market help. I'm a little more bullish than bearish on the U.S. stock market right now. And that could actually kind of rising tides lift all boats mechanism. And crude oil could obviously give that a boost if it starts moving north. And, when you're talking about buying underlying instruments, you want to try to find the best in the sector first. And then you want to try to, map that to, if the market rises, is that sector going to rise? Is it a standout? And also kind of have some relative strength versus the market itself. Let's see what's going on here. Somebody's asking, is it more bullish for a new profile to appear above the previous profile versus below price action? Well, in all honesty, to answer that question, when we have a new profile appearing below price action, even though this is appearing below the most recent profile, kind of lower highs and lower lows, I'm still taking that as a bullish scenario. And that kind of overrides the situation where this is a really weird. This is interesting because a lot of times you don't see this. Usually, when you see these profiles appear, they're usually in line with what's going on in the price action. But this kind of overrides any type of non-correlation with the profile itself kind of edging higher. So to answer that question, I look at these things right here when we have a new profile appearing below price action. It's actually extremely bullish and exactly the same on the opposite side. I had a couple of questions I overlooked here. UTX and TLT. Let me hit those really quick. I think UTX was first. UTX. So United Technologies going to the long term, not a good situation, and actually not looking very bounce-ish, if that's a word. And again, this is another good example. This is a profile. This is our daily, and I want you guys to kind of notice this. I haven't looked at this. I just pulled it up. These things don't map themselves backwards. So when we have a new demand area attempting to appear, we have this orange bar. You'll see this in the scanner as a yellow peel back on UTX. And actually, the scanner's up. Let me just pull this up here really quick. UTX. That was a yellow peel back in this daily section. But if you'll see, this arrow is down. That means that the trend on this particular time frame is still down. It's really cool how you can kind of look at this and really not have to look at the chart, to be honest with you. Here's the new profile, 8740 up top, 8419 down below. Let's see if our charts are good here. There's that 8419 and 8740 rounded off. I'm sorry, 8739 and a half up top. But we hit that. Let's see, go back to my chart here. We hit that. We reached a high of 8738. So, 2 cents off. If I blow this up, it looks kind of more cool. Considering that the weekly trend is down and we don't have any new demand areas attempting to appear, we've got to take this as stock in a downtrend, finding new resistance points to sell, and that was the case. So, again, I probably would assume that the question is, what do you do with it now? In my opinion, it's not the best long on the board. And to be honest with you, we're going to have to, we kind of caught a situation where we could sell resistance before. Now we're going to have to wait and see. If the market moves higher, we're going to have to, just kind of wait until we breach this 8740. I'm not a big fan of buying support on 8419. I'd love to sell breakdowns on this. So again, I think, we're in no man's land right now. Pre-market, we're trading at 85.35, had a little bit of an action on the downside this morning, just kind of pre-market. I'm sorry, let me blow this up. Just a little pre-market herky-jerky activity. Again, I'm not looking at this as the best long on the board. I'm looking at this as either sell resistant at 8740 or sell breakdowns below 8419. If I just can drag that out any longer to make one simple statement, we can have a contest about that. And probably will win. TLT. Let's first reference what's going on with the Treasury market. We haven't even talked about that this morning yet. Notes. Big number we've talked about, 128, and had I love how this is acting, actually. A couple of chances to try to make a close above on the weekly, above 128.28. This has kind of been the fence for me. Here's what's going on right now. Pre-market, we're trading about 128.19. I like how this is acting. I like how this has the possibility of exploring down into 127.21. I like the idea of being able to put stops above two inflection points, namely 128.25, 26, 128.28. If I get stopped out, I get stopped out. I like the way this is acting, actually. I like the way the U.S. stock market's acting, and this is a little bit of an inverse relationship when it comes to that. But let's take a look at TLT, all things considered. This is our long term on TLT. So Again, 125. I'm not a big fan of going long treasuries right now. And you've got a new demand area that's happening here, or new supply area, excuse me. We'd have to have a close above 126.71 to get really bullish on this, even though we're trading above profiles and have retested this TLT situation. Not a big fan of going long this. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Steve Rhodes, is Launchpad working again for the indicators? Just want to check with that. I think we are completely back up now. Okay, great. Great. Guys, I apologize for this. It's never our fault. Sometimes it is. Just joking. We're going to take a look at the ETF situation here. We're going to look at the daily. And one of the these sectors that I want to look at, we got about 3 minutes left here, is let me go back here. The industrials had started poking their heads up a little bit here. And what I want to do is go into these industrials. Let me see if I got any. John Hillary Logan. Funny, Scott. Them's fighting words around here. Here we go. We're going to take a look at the XLI. And what I want to do is just kind of find some of the stocks that are trading above profiles. And then you can also kind of look at some neutrals here with arrows up on a long term. I'm going to look at, let me just go back to the other one. Let me go back to the ones that are trading above here. I want to look at Equifax, EFX really quick. And let's see, EFX. Here we go. This is one, you got to love this, actually. Equifax, EFX, it really showed the strength. Obviously had to pull back with the market here, but this is that relative strength, kind of put it on the radar screen situation. Not going to be exciting. You're not going to catch the low print and catch a massive move up on trading like this. But again, you want to try to find the least painful situations when it comes to being wrong. And Equifax, in my opinion, you've got this stake in the ground around 104.52, which is daily unfair highs coupled with this 104.37. And when I go back to the scanner, you're going to see top there, top one green. And you don't see that here on the daily because we're past it a little bit. But if I go back into the charts on the scanner, here's the daily, here's the weekly. Again, being short this stock right now, I would be kind of concerned and somewhat scared. Any type of market moves up, you're going to see this as something that's more than likely going to just kind of rise with that particular notion. And again, I think you've got some odds in your favor. Just kind of scanner, putting it on your radar screen. Might want to put it in a little custom list and just monitor how these things act and work when it comes to market action. And when I go into the scanner and I look at these, XLI, what's the ones that are super mega attractive to me? This is not a bad situation. I'm going to take a look also at Lockheed Martin and LMT. I'm sorry, Lockheed Martin and Northrop Grumman, LMT and NOC. And I don't know why I keep going back to E-Signal. Let me go to the chart here in Lockheed Martin. Big, nice reversal move. Let me just pull up LMT real quick here, Bob. I like how the action happened on this. I love how this met that weekly unfair low around, 201.62 and bounced up, and now it's gotten back into trading above profiles, 209.60 pre-market. And you got to like this type of situation. You got to love it. That means it found buyers, more than likely going to have some follow through, and you can use that 209.49 as a fence now, 209.47 as a fence. How do we know that? We go into the scanner, we mouse across here. There's that 209.47 as I mouse across. Again, something on my radar screen. I hear the music. We got to go. Larry's next, guys. Stay tuned. Steve Rhodes. After that, Tom O'Brien, David White, Daryl Martin, Basil Chapman, Tom O'Brien, of course, multiple times during the day. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.